Hey, and welcome to another Skag Academy video lesson. We are now going to begin the execution tactics portion of this course, and we're going to start with a lesson called Infinite Opportunity. So what we're going to discuss in this quick little lesson here is just all the different ways you can look at the market, whether it's in a high time frame or a lower time frame aspect. For those of you that have some existing trading knowledge already, you may have heard that markets are fractal, meaning something that happens on a lower time frame is also happening on a higher time frame. And if you're new, what you're going to learn here is just exactly what we're talking about with infinite opportunity and fractal markets, right? How something that's happening on the 4 hour, there's also little mini cycles happening down on those 1 hour, 15-minute, 5-minute time frames, and how this will create sustainably just infinite opportunity, right, all throughout time. So let's just take a look at our charts. We're just going to take a look at Bitcoin here, and what we're going to do is just break down the cycles that have happened on Bitcoin, right, and all the different opportunities that have kind of arose from those cycles. So we're just going to focus on this pretty recent chart of Bitcoin. We're just going to kind of mark up all the pretty obvious cycles that have already happened. We're not going to be looking to do any sort of like forward casting, just looking at this data that's already here. Right, so for example, we have up top here, we have this very obvious distribution. We know this because we can see not only if we wanted to break down the phases here, but we also see the reaction already. So we can already assume that this is a cycle that played out as distribution, right? So we're just not doing anything fancy. We're just going to mark out, right, the cycles that have already happened, already very obvious on the charts. So we have distribution, we have, which obviously leads us, excuse me, right, to our markdown, right? And then we started a new cycle here, which ultimately led to be redistribution, which creates opportunities for continued selling. And that continued selling is represented in a markdown. Since these ranges are getting small, I'm going to just do MD for markdown. And then again, we create another new cycle, more opportunity, which is another redistribution, right? The RD. Let me just move that to the front. Bring it to front. Right, more distribution, more price markdown. And then look, we get a new cycle. excuse me, of accumulation, which inevitably leads to a mark up. All right, all this opportunity within the market. And then now we're kind of getting a dragged out higher time frame cycle, which, you can either assume is accumulation or redistribution. Just for obvious sake, we lean towards redistribution personally based off what we've seen. But again, this is not an analysis video. But we can see the cycles that have played out here, and this is all opportunity, right? If you spot this distribution, this markdown then becomes all opportunity. If you spot this redistribution cycle happening, this markdown becomes opportunity. Again, another cycle, more opportunity. Another cycle, more opportunity. Cycle going on right now. Future opportunity, coming. But when we talk about infinite opportunity, even with inside of these cycles, there's smaller cycles that again provide additional infinite opportunity. Like if we wanted to refine this down to a 4 hour, we get more candles, more data, and more opportunity. Right? Let's just come back to the beginning real quick. Right? If you drop this time frame even lower, you'll know that this is some sort of distribution schematic on a lower time frame, which then gives you the markdown that you see. Right? And it goes on and on and on. And we're not going to sit here and just keep, knotting the time frame down and doing the same thing. But as you can see, again, we get another redistribution, right? That leads to a markdown, and another redistribution that leads to another markdown, all within inside. This is another cycle inside of that. And you best believe that if we knock this time frame down again, up inside these wicks, there's another smaller distribution cycle that's happening, right? And the reason I want to go over this, and some of you, again, if you're already been trading and you know the markets are fractal and you understand this might be a very new concept. But the reason I'm bringing this up is because you have to be monitoring cycles on all time frames, right? If you're trading an asset like Bitcoin, right, and you want to be an active Bitcoin trader, you want to look at all of the cycles it's going through. You want to be aware of any sort of daily cycle that it's going through, right? Any sort of 4 hour, and then any sort of like kind of like intraday. I personally break this down, very basic stuff. Honestly, personally, you could break it down into three different things, right? Three ways. You have your higher time frame or your macro, which is just your 1 day and above. Then you have your intraday, as everybody knows with your time frame analysis is going to be anywhere between like a 1 hour and a 4 hour. And then you have your lower time frame, which is generally your minute time frame. So this, if you are a real low time frame trader, you're going to include the 1 minute here. But for most people, it's going to probably be between like a 5 minute and, again, that 1 hour kind of time frame, right? So you always want to be doing your kind of multi-time frame analysis just so you're aware of all the cycles, because what you may think is, if you're looking at like a 5 minute accumulation, or let's just come here, let's just say you were looking at this as a potential 5 minute reaccumulation, that's great, right? You might even get that pop, you might get that, but what you need to be aware of is any sort of 2 hour cycle, because what happens if that reaccumulation is only going to pop up into, say a 2 hour or 4 hour order block, right? You need to be aware of that potential cycle so you can sit there and manage the trade. Another reason I'm bringing this very basic concept up to people at the beginning of the execution tactics is because a lot of the stuff going forward that we're going to cover is going to be kind of variable. I'm going to give you guys the clear-cut way that I do things, but the way that I do things, time frames that I utilize, right, the exact execution tactics, and kind of like day trading schedule that I follow may not fit your life, may not fit your preferences. It doesn't mean the core information and monitoring cycles and how to execute is not going to work for you, but you need to adapt it into, your personal trading, plan, which is basically what this entire section is going to go over. It's going to go over the different areas of execution tactics that you need to learn how to apply, and then you're going to kind of build your own plan, either using mine as a template or just based off your own experience in the market, which is what I would recommend. But yeah, that's all about infinite possibilities. They're just, you can do so many different kind of cycles. There are some people that preferably only trade 5 minute charts. That's great, but that doesn't mean that you don't need to be aware of what's happening on those 4 hour cycles, because if you're getting the chance to play into a 4 hour UTAD on a 5 minute time frame, you can get a really nice risk to reward, and that's how you can, develop swing trades and learn how to manage things long term. So with that being said, let's continue on to the next lessons inside execution tactics. If there's any questions, comments, concerns about multi-time frame analysis and the infinite opportunity that exists, make sure you guys comment them below, tag me in the Discord, and I will see you guys in the next lesson.